Welcome to this week's live ASX strategy session. Thank you as always for joining me. Great to have you with me. Look, as always, we're going to be talking about starting off with the ASX 200, going to have a look at the small ordinaries, interesting things going on in both markets. And then we're going to go on to the commodities. I've got gold, copper, I've got oil, I've got uranium, lots of stuff to talk about across all those. And then I've got a couple of stocks for you. And one of those is a bit of a different way that I'm playing gold. So it's not your classic gold stock. So I think you're going to find that pretty interesting. So it's a different play on a potential gold rally. And as always, all of this is general commentary, doesn't take your personal situation into account. I think it's time to get into our first chart. So let's go along and get this going. So I'm going to call up the chart of the ASX 200 to start us off. And this has really been a bit of a surprising week. Well, at least it's been a surprising week for me at any rate, because I thought the ASX 200 was probably heading towards some sort of consolidation after that strong rise we had off the low a couple of weeks ago. So that was a 5% rally, and often those sort of rallies lead to some sort of consolidation. And there was some signs late last week that consolidation was starting to happen. But then on Tuesday this week, we had another strong punch to the top side. And so prices are now back at this overhead resistance at around 7,100. You can see how it all stretches across all the way back to around April. It was the lower end of this trading range that the market had been in. So we're back at that resistance area now. It's a bit of a messy resistance area, because you can see that, like, when it was support, we had these excursions to the downside on several occasions. And now on the upside, it nibbled through it in October, got through it again this week. But whilst it is a bit messy, and there've been those swings either side, you can still see there's been this clear area of technical activity. So I think it's a worthwhile level to keep an eye on. And so the big question is, where to from here? Where to after this rally, and where we are testing the resistance? And I think we need to be open to the possibility that what we're seeing now is the start of a sustainable rally. And the big thing for me, it's this false break we had to the downside in late October. So you can see we had various support points along the way. We got the break to the downside, like we did in the US markets as well, particularly the S&P 500. Got that breakdown. We're at a point of vulnerability where the price was breaking below previous lows, below declining moving averages, vulnerable, but it couldn't accelerate to the downside. So when you get that sort of situation, and then you get a strong rebound to the upside, well, then it's potentially a positive sign when the market doesn't sell off when it's vulnerable and instead goes on and rally. So I spoke a couple of weeks ago that this recent low, that perhaps that it was that it could be the end of an ABC or a zigzag. Probably more to the point, we call it a zigzag correction. So the big rally last year, reaching the top in February, and then your classic zigzag correction consolidation. So one possibility is that what we've seen is the low from that zigzag. So that's one of the possibilities that we need to entertain. We need to keep in mind as we go forward. I like it when a market rallies and then pauses. That's for me, that's a classic way of being able to find those entry levels, and then buying a breakout following a consolidation. We haven't had that on this occasion, so that makes it a little bit harder. Sometimes we get these cases where the market does rally without much of a pullback. And an example of that was got that last year, last October, November. The market pretty much ran without much of a pullback. And so we've got to remain open that perhaps that sort of situation could come again. And that's particularly if this were this zigzag type consolidation over the last 8 or 9 months. I think that also noting these moving averages, that they look like they're starting to turn. They're twisting to the upside. They haven't crossed yet. That's going to take a little bit longer, but they're starting to turn. Saw a similar situation back last October when the market was rallying without that pause. Those moving averages were turning, and so this is where we're getting onto some of these rallies can be difficult, and it can be harder to find those clear points where you buy the market. So the way I'm playing it is I don't want to be sitting on the sidelines watching if we do get another situation like last October and November. If that were to unfold from the current lows and the market just um, keeps rising, I don't want to find myself like out of the market, sitting on the sidelines watching. Having said that, I'm not rushing back in either because I still think this is a pretty clouded technical picture. But having said that, I am increasing my equity holdings. That's what I've been doing through the week. I've been buying stocks over the last few days as we have had this rally. And I'm basically buying into strength. I'm looking for those those situations, those individual stocks where we've got rising moving averages. Stocks are breaking to the upside. We had momentum. That's where I want to increase my equity exposure because I'm aware that there is a possibility that we could get a bullish scenario develop from this current price action. I think I think this is a time for gentle portfolio adjustments. I don't think it's a time for those big swings and in opposite directions. I think there's still plenty of uncertainty out there. And as it stands, it is a market which is still sitting below a key moving average. So this being the 100-day moving average, the market's still sitting below. So I think we need to respect that there's vulnerability here, but knowing there's vulnerability, I'm still cautiously moving forward because sitting on those sidelines and watching things move, thinking something else is going to happen, it can be a frustrating. It's also can be then hard to come back from. And so for me, it's going to be a case of if we do see pullbacks, then I can step back. I can start to reduce risk if the market's losing its footing. But there is a strategy to build a position if the market does run. And it is look, as I say, it's uncertain. It's one of the least clear pictures of we've had in this market for a while. Now, if you're getting value from this, please hit that like button and leave a short comment. Let YouTube know you're watching, that you're enjoying it. If you're watching the live video, you can't leave those comments on YouTube as such. But if you're watching the recording, please leave those comments. And now I'm going to move on, talk about the small ordinaries in a moment. I'm going to talk about commodities, and I'm also going to tell you about that unconventional gold play, which I think you're going to find really interesting. And I've just bought a holding in this myself. I'm going to get to that in a moment. But this is the this wraps up the free section. So we're moving into the strategy section, session members section next. So if you're not a member, there's a link below. You can click that. You can come along. You can join in. It's just like doesn't cost you much. It's just like bringing me a coffee to the session. So really simple to do and come along. I'd love to see you in the session. Now, okay, now for our strategy session members, let's move on to the small ordinaries.